Welcome to the Jones Zone, a podcast by Darryl and JJ Jones.
So how does the underwriting process work for determining the appropriate title insurance coverage amounts? I mean, is there a limit?
So the coverage amounts are based on the sales price and the loan amount. So that's what we issue our policies for. There are certain limits and deductibles and things that are covered within the policy that you would have to read through your policy to determine. But for the most part, it's just based on purchase price and loan amount.
Well,
that's
right,
what it's.
Because it's all relative to the price. So can you explain the difference between an owner's title insurance policy and a lender's title insurance policy?
Sure. So the owner's policy ensures the owner that they have title to the property and that there aren't any liens and judgments. It's clear. The lender's policy ensures the lender that their loan's in first position and that the person that they've given this loan to actually owns the property. So two different policies, two different coverages.
That makes sense. And the lender's policy is the one that's not quite as expensive, or?
It's discounted. Well, it's discounted two different ways. It's discounted if it's issued concurrently with a sale of a property. So it's a discount to the buyer. And it's also discounted if you're doing a refinance because we issue the short form policy. We're not showing all the exceptions because, again, they don't really care about easements and CC&Rs and things like that.
And you just did it. So there's a good tip. So if anybody that bought a house, when they go to refinance, find out what title company used and use them again.
Sure, absolutely. Well, your search will be faster for sure.
Okay. You're with Ticor Title Insurance. Now, we were talking a little bit before the show started about how similar to my real estate company is owned by, you've got the parent company that owns a lot of different real estate companies. For example, Coldwell Banker, Century 21, ERA Sotheby's. They're all owned by the one parent company, as they say. How's it work with Ticor? Tell us more about Ticor Insurance.
So Ticor is actually not an insurance company. So we're Ticor Title Company of California. We're an agent for Chicago Title Insurance Company. So all of our policies are written on Chicago paper. F&F, which would be Fidelity, which is the larger brand.
What's F&F? Fidelity?
Fidelity National Financial.
Okay.
They are our parent company. So all of our underwriters, our whole underwriting team, in-house counsel, all comes from Fidelity with a shared group of Fidelity, Commonwealth, lawyers, Chicago, a bunch of brands within the F&F family. So we're an agent for Chicago. I would say, what makes us different or any title company different is the knowledge that they have and the people that they have at that company, how long they've been doing it, how they work to resolve problems, because ultimately we all issue the same policy. It's all the same product. We're all regulated by the Department of Insurance. So all of our rates are basically the same for the most part or close to it. So it's all about the service and how you get a deal closed.
That's what I was going to ask you, if people can shop title insurances, but there's not going to be a big dramatic difference between title
There
insurance.
shouldn't be, but if you have a relationship, I know like with my clients, a lot of our sales reps have these relationships with listing agents. And what they like to do is once they get a listing, they open up a title report and they get that title search before they even have a buyer. Because if there are issues that come up, you want to handle those before you have a buyer so you don't come down to closing and you're unable to close because you need to go out and handle uninsured transfers or get rid of old liens that haven't been released. So that's what we like to do is get those orders opened early, review the title, handle all those issues so we have a clear closing.
Preliminary title report.
Yes.
Yeah, and now you oftentimes have to be Superwoman and come in and save deals, right? Because
a lot of the time.
We've had transactions where there was something on the title, whether it was a deceased uncle that never signed something or whatever. And can you tell us a good, compelling story where you saved the day?
So I've had transactions where, we're dealing with a lot of properties that are held in a trust, which is great because you can avoid probate that way. But you really have to read the trust. What does the trust say? Every trust is different. So we like to get those ahead of time if we can with those listing prelims and find out who really has the right or authority to sign on behalf of that trust. If there's any life estates maybe that are granted in the trust, I've seen that happen where Sally, successor trustee, she has every right to sell that property. But within that trust, it says Uncle Bob can live in this house for the rest of his life if he wishes without paying rent or whatever. And if you miss that in that trust and you insure, now your buyer has an issue. They have title insurance, but they still have to deal with that. There's still going to be some legal ramifications. They might have to get an attorney because Uncle Bob wants to live in that property and he has the right to. So those are the kinds of things. We as a title company, because we insure clear title, we're going to reach out to Uncle Bob and say, can we get a signed consent? Can you say that, you don't wish to live in the property, you've moved out? We require documentation, signed and notarized, to make sure no one else has a legal right to that property, whether it's of record or not.
And there's another remedy. I know that we've closed escrows before where there was some sort of title issue. And I don't know if there's a certain formula or if it's a case-by-case basis, but let's say there's a $50,000 debt that we can't resolve somehow. And you guys can typically go forward and close the transaction, then you keep 3.5 times into escrow or something like that?
It depends. So I have a transaction actually right now that I'm working on where there was an old deed of trust. We reached out, not we, but escrow reached out to the beneficiaries. It's a private party loan. And it's old. It's from like the 80s. But those don't expire because they don't have an ending date or a note ending date. And usually when you're dealing with private party beneficiaries, they don't go into like a foreclosure, like a Wells Fargo or a B of A. If you don't make payments, they would start the foreclosure proceedings. So we reached out to them, escrow reached out to them. They didn't get a response and they needed to close. This deal had to close by this certain date. And ultimately they wanted us just to take it out. We can't do that. We have a responsibility to the buyer. And the seller has that responsibility to the buyer. So we as a title company were willing to hold funds. They had enough funds to hold so we could close by the closing date and wait for that reconveyance to come or demand, whatever that might be, from the beneficiary.
Now, what happens, God forbid, is there a time limit? Let's say there's $150,000 of the seller's money in escrow just waiting there for weeks and weeks. And we've had this happen. I think any agent that does business has had this happen. And then they eventually get it. And but have you had a transaction where just, oh, goodness.
There isn't really a time limit, and it kind of depends on the reason that we're holding funds. There's all different reasons that we would hold funds. We like to only hold funds 30 to 90 days. We don't like to go beyond that because we don't want to have those funds in our file. And ultimately, the seller, they want those funds too. So they're going to do whatever they can to make that happen. But
pretty motivated.
Yeah, the beneficiary, once they are, given something in writing or asked for something in writing, they really only have 21 days to perform. They either have to provide a demand or they have to give a release for that recorded deed of trust. So,
and if they don't provide a demand, it's considered a release after a certain amount of time?
No, then you can pursue legal action to get them to release. You can actually take steps to
Am I asking legal questions?
You are,
Okay,
and I'm not an attorney, but
I get it.
21 days is what they're supposed to perform in.
And then one's never able to find, do you have any stories about where, and we could edit this possibly, do you have any stories where, gosh, we can't find Uncle Bob or their beneficiary to sign off?
Yes. Yes. So if you've done everything you can and it's super old, you don't have a way to contact them, you can get what's called a bond, and you would go to a bond company and they basically are ensuring that loan is paid. And that's done between the seller and the bond company. And then it's basically insurance for us, the title insurance company, and it removes that deed of trust.
All right, that makes sense. And the bond, is there a cost? Obviously, there's a cost.
There is a cost.
Is it a formula? Is it, in other words, if it's $150,000, it's going to cost 10% or whatever?
All bond companies are different. I believe it's based on risk, and that would be a question for them.
Got it.
Not sure.
All right. Cybersecurity is such a big issue now. I know I had a recent transaction, relatively recent, last year. Luckily, the buyer's bank caught it because not my buyer, I had the seller, and they sent the wiring instructions to his bank for a lot of money, close to $1 million. and the bank caught it. And sure enough, it was fraud. It was going to whatever.
Yes.
And so can you talk a little bit about that?
Yes, wire fraud is huge. Also, emails being hacked. I mean, we'll see that a lot too. Most of our secured communication is through secured emails. So if like statements of information are sent, all of that is secured. Wiring instructions, when we send them out, those are all secured. And in addition to that, the lenders are also, because the lender is who funds to us, the buyer usually sends funds to escrow. So we'll send secured wiring instructions to the lender individually, directly, typically, because escrow doesn't even want to be involved in that part. And then the lender will reach out to us and verify them verbally before they wire funds to us. We do the same when we're wiring to escrow, because we send all the proceeds to escrow for all the distributions to be made. So we definitely have checks and balances. We have a whole accounting department that everything's filed and recorded of where wires have been sent to previously, people that we work with, have a history with, but we also verbally verify as well.
Yeah, the cybersecurity is a big, big deal. It seems as though it's going to get a lot potentially worse with AI. I know I had a doctor friend, a client. She was buying a house, and I was telling her about a friend of mine who had a crook contact his 16-year-old daughter through fraud, and they stole her number. It looked like it was coming from her phone.
Wow.
A long story. So I'm telling my client this, and she was saying how she had a friend in China. And apparently in China, they have to, when you go to the hospital, everybody has to verify this. This is what I'm being told.
Uh-huh.
When you go to the hospital, you have to pay in advance. It's like,
Uh-huh.
her friend got a call, said, hey, Dad's in the hospital. It's his mom. Mom's number, mom's voice. Dad's in the hospital. We need 30,000 wired to the hospital. He's not feeling well. Okay, what? So, okay. And this guy's an attorney in China, so he's sharp. And he waits 10 minutes, calls the number back, calls his mom back, says, hey, Mom, I just want to make sure. He says, yeah, you got to send us the 30,000. We need it. You know how the hospitals are. So they send it. The next day he calls up. He says, hey, Mom, how's Dad? She goes, huh? Well, how's Dad? What are you talking about? We talked yesterday. Dad's in the hospital, right? No, he's not in the hospital. So now AI had not only stolen her number, but also duplicated her voice.
Wow.
And so he was thinking he was talking to Mom, and he wasn't.
Yeah.
So they're out 30,000, but they're getting pretty sophisticated.
Yeah. And one of our escrows, not our internal escrow, but an outside escrow, something similar like that had happened where they got wiring instructions at, a last minute change of instructions, but they had a phone call with the seller and they confirmed that the wiring instructions were changing. And she swore up and down she spoke directly with the seller. And I don't know if it turned out that it was an AI situation or what had happened, but she had wired the funds to the bank. And because I believe it went to a New York bank, which was a reputable bank, and then it was going overseas to like a debit card or
probably
something.
some island in the Caribbean.
Yes, exactly. The bank stopped it and they were able to get those funds back. And it was close to $1 million, the same situation. And she swears up and down she spoke with the seller and she believes it was an AI situation. But it happens. It happens. You have to be vigilant.
There's going to probably some sort of change in protocol eventually.
There has to be.
Maybe like a notary. You have to. I tell my clients, my sellers, I say, look, if there's any changes done where your funds go via email, just ignore it because it's fraud. The escrow does not do it via an unsecured email.
Right.
Typically, it's in writing even at the beginning of escrow, and you have to sign it.
Yes, absolutely.
Which obviously helps protect. Now, what about forgive me, I'm kind of jumping around, but a binder policy. A binder policy, tell me what a binder policy is.
So a binder policy really just kind of holds your place in title, really. So if you're an investor, you're buying this property, you're going to fix it up, you're going to sell it within 2 years, it's a good idea to get a binder policy. So what that is, the seller still ultimately is paying for title insurance, but you're purchasing a binder, which is 10% of that. So say your seller buys the owner's policy for $2,000. You're going to pay $200 and will receive what's called a binder policy, which basically holds your place in title. You go to sell that property, and when you sell that property, you get a discount on the owner's policy that you now have to purchase for your buyer. And it's typically, or how it works, is whatever was paid for the original owner's policy gets discounted from the new policy. So
Yeah, when it's a quick turnaround, there's far less chances there's going to
Right.
be flaws in the title.
right,
Sure.
because it's not really a policy of title insurance. It's just a placeholder, basically.
Got it. People are probably wondering also what the heck title insurance costs. We didn't even go over that. There's a formula for it, correct?
Well, they're all filed rates. So not real. I mean, there is, but they're filed rates. And
What's that mean?
So the rates are all filed with the Department of Insurance, which regulates all title rates. So that's all done by our underwriters and Fidelity, basically.
To get a ballpark. So if someone's buying $1 million property,
Mhm.
getting a loan for $800,000, 20% down, what's the approximate cost for the seller to get title insurance?
I mean, it's probably going to be a few $1,000s. I'd have to look at my rate schedule to be
Okay.
exact,
A
but
couple thousand.
a couple thousand.
Okay, just so people get a kind of
Right.
a little bit of a flavor.
Mhm.
Melissa, thank you so much for joining us. I think you've answered a lot of questions about people, our audience. Hopefully, we're interested in knowing more about what title insurance is, what it does it do, how you do your job. And so, in a nutshell, your job is basically not to trust anybody.
Basically, yes, that is
Wow.
my job. To always be on the lookout.
You just have to always assume what's wrong here.
Yes, find the problem. That's what I do.
Well, this was another great episode. I think it was a great episode of the Jones Zone. Please subscribe to our channel. The more listeners we can get, the more people we can help with this valuable information. So signing off again. Thank you, everybody, for listening to Jones Zone. Thank you, Melissa, for coming down. I appreciate you so much. Take care, everybody. Bye-bye.